Am I audible now? Shall we? So sorry, 10 minutes gone. Okay. Today's class, we are going to discuss about the banking structures and types of banks. Okay. No problem. Whatever you attended, those classes you can continue. The classes that you not attended, you can visit the link given in your portal, and there in YouTube you can watch. I'm sharing screen here. Children, I don't have this material with me. Okay, based on the syllabus, I'm collecting the data and explaining you. The material, only syllabus copy I have. Hard copy of the material, I'm not having. So please do join the class. Today we are talking about types of banks. Okay. Types of banks. Second, I'll show you later. Share. Is this screen visible to you? If I change, yes, this is visible. This is visible. Look at here. This is second block, commercial banking. Under that, we are going to discuss about Unit 4 and Unit 5. Okay, we may not be able to complete Unit 5, that is credit creation, but Unit 5, functions of commercial bank. After that, we can complete it. Okay, so Unit 4 is about structure of banking system in India, branch banking, unit banking, deposit banking, group banking, chain banking, and then central bank, commercial bank. In detail about the commercial bank. In block 3, we discuss about the central bank in detail. Okay. So let us see. Yes. Structure. What is the structure? Every bank, every country has that means the banking system, how it works, and what are the different types of banks and their functions. It's a functioning system. We are going to discuss here under the structure of banking system. Okay. The first one is about 1 second. Yes. This is branch banking system. Branch types of banks. You have branch banking, unit banking, chain banking, group banking, mixed banking, central bank, commercial bank, industrial banks. All these are the different types of banks that we have, and we are going to learn about the main banks under the types of banks. The first one is branch banking. What is branch banking mean? Branch banking is a banking system in which banking organization works at more than one means branches, different branches at different places. It consists generally almost all every bank has its different branches located in different places in order to provide convenient to the customers in operating the banking transactions with their bank. So that is branch banking. So let us see what are the advantages of this branch banking. So by with the rapid growth and wide popularity of the branch bank system from the century, we have seen so many advantages. It is economics of large scale, spreading of risk, the economy in cash reserves, diversification, economics of large scale. By operating by having a large number of branches at a different locations and reaching to large number of customers, they will their income will increase and the expenses they can reduce. The economy in the large scale operations, the expenditure can be reduced. Okay, the next, spreading of risk. Spreading of risk, that is, if one branch makes the loss, the other branches, the profits of other branches can be adjusted by the branch banking system. The economy in cash reserves. Yes, even the adjustment of cash reserves. Generally, as per the Reserve Bank of India, every bank has to maintain certain cash reserves apart from their deposits, out of the total deposits. So if any bank is falling shortage of the required cash reserves, that can be adjusted from its another branch. So that kind of adjustments of cash reserves is possible. The next, diversification of deposits and assets. Yes. See, SBI branch, if you take an SBI has a branch in a Nalakunta and SBI has a branch even in the Siddipet. Okay, if Siddipet branch, Nalakunta branch has fallen short of the amount the customer deposits, and in that day a customer who wants to withdraw some 5 lakhs at a time and from his account, the bank is falling short of that amount, then it can ask the Siddipet branch to forward that amount, whatever the amount falling short, and can adjust it with that bank after it collects that required funds. Okay. So like that kind of diversification of deposits and assets as possible. Decentralization of risk. Yes, yes, risk instead of operating at one place and having facing a risk that branch. Okay, that's what we say. Spreading of risk, repetition of the same heading. Next, easy and economical transfer of funds. Easy, yes. Again, easily. Again, this title also repetition of the diversification of deposits. Easy and economical transfer because easily within the branch among themselves, right? They need not to go to the another bank. Instead of going to another bank, within the branch, from their branch itself only, they can easily transfer the funds and make the adjustments. Like you adjust the funds among your relatives instead of going to your neighbor. Okay. Next, cheap remittance facilities. Yes, when it is with when you are raising funds from among your relatives, you get at a lower interest rate, right? Okay, instead of you go out to the outsiders. Right, same way here, the adjustment of among the branches of the same bank is very cheaper as compared to the adjustment with other banks. Uniform interest rates, because all the branches comes under the one bank, so whatever the fluctuation rate, anyway, if the interest rates are there, those going to be uniform, there won't be any adjustment. Proper use of capital, yes, where funds are mobilizing very less, that can be utilized where funds are required where more, and or can be spent in the proper investment opportunities. Better facilities to customers. Yes, by having so many branches, the company, the banks can able to provide good facilities to their customers by reaching closer to the customer. Okay. Better facilities, contacts with the whole country. Yes, by having by opening a large number of branches. You may be if you have a habit of reading the newspaper, you can notice when banks are opening their different branches, we proudly announces that our branch is opening so and so number of our bank is opening so and so number of branches, 108 branches in the so and so area. Like that kind of news you can find. Okay, what I mean to say is generally banks open their branches at different places, and so that they can reach maximum number of customers and they can have more customer relations and more services they can provide. Income rates, see, this is the same repeated better training facilities for employees. All the branches employees are provided. Disadvantages, difficulties of management, supervision, management, supervision, and control. And then there's just management, supervision, because the branches are people working in branch. Not helpful.
Ma'am, your voice is not coming.
Audible now?
Ma'am, please share a screen, ma'am.
I'm sharing, ma'am. Maybe network issue. It's not showing. That's why I joined in the other from the other what do you call other device.
Okay.
I'm sharing my screen. Let me explain you. The system hanged. It's asking to wait for some time. So the disadvantages of this branch banking is the difficulties of management, supervision, and control because different branches in different places and controlling these people located at different places by the head office gets very much difficult. The next one is lack of initiativeness. Why there is a lack of initiative? Because all the branches are uh, under the are under the control of not the control. All branches are occupied by employees. Those are paid employees, right? They just work for the salaries mostly. So initiative to bring the bank and make the profits, get the profits to the bank gets difficult. I'm talking about branch banking, showing unit banking network issue, I think. Yes. Okay. Monopolistic tendencies. A bank that is having so many branches usually will try to rule. Okay. The next one is regional imbalances because the branches only where they have so many branches or where public demand is more there if the banks go on opening their branches that leads to the regional imbalance. So that is these are all older, but now almost all every village is having a banks except certain tribal places and hilly areas. Okay. Next one is continuation of non-profitable branches. Yes. In non-profitable branches are also requested to once you open the branch, winding up gets it more costlier than running it. That's the reason why opening of running of the non-banking non unit banking system.
Ma'am, your mic is off.
Yeah, unit banking system. If you see the unit banking, it's a single banking system from only from one bank. They do operation and control. They will not have any branches. Any branches will not be there. Only one bank continues their all operations, and it is the controlling powers also there.
मैम पान कार्ड उसका से अप्लाई करके आएंगे ना एटीएम का एटीएम आते ही नंबर निकाल देंगे ना निकल रहा
Please unmute yourself. Mute your mobiles.
देखा उठा से निकाल के देख ले रे बा
Okay. So unit banking operations are carried by only single office where controlling and operations are takes place. Okay. So as it is a single banking, it is open. We call them as a localized banking system, and they are smaller as compared to the branch banking system. Okay. The next one is advantages of unit banking. If you look into the advantages of local funds or local people, means unit banks wherever they operate, there only they have the that public only will invest or deposit their funds. So local funds for local people, intimate knowledge for our customers. When they are operating only in from one particular area and only particular their particular area people they are serving, automatically they'll have a good knowledge about the customers. Efficient management supervision. Yes, only when single bank and single place they are controlling operating, automatically it becomes efficient to control and supervise. Next, no need of inefficient branches continuation. Better service they can provide. Closer banker and customer relations they can maintain. Risk thoughts will not be there. Development for the local areas. All these are the some advantages of the unit banking. Looking into the disadvantages, economics. See, whatever the advantages of branch banking you learn, those you can write under the disadvantages of unit banking. Remember, children, because here as a single unit, they are running their business. So in that area, whatever if they have more deposits and more saving, more customers coming forward, they can make the profits. Otherwise, it becomes difficult for them to make those profits. Okay. The next one is uniformity of interest rates cannot be maintained. Then a lack of control. Why you may say, madam, why lack of control? Is a single unit only now. Why lack of control? Lack of control is here is talking about the knowledge aspect, because the limited knowledge that particular region, when you don't explore yourself, the knowledge will be less, and the controlling and managing efficiency will reduce. Yes. The banks will face the risk if they fail in meeting the expenses or the customers. They'll have, because they'll have a limited resources. The next one is unhealthy competition, because the small banks and the competition between the small banks is not good, not to be encouraged. The banking development no banking development in backward areas. This generally, when they are operating as a unit banking system, they'll prefer the cities and large areas, large cities. Okay, the crowd population places they prefer. So automatically they'll not look into the areas where population is less or backward areas. Those areas they'll not prefer. The local pressure will be there when it is operating as a local branch. The next one is differences between the branch banking and unit banking. Is these differences itself also you can take and you can write a question under branch bank and a unit bank, children. The operational freedom, branch bank you have less freedom because head office it has to wait all the decisions from the head office. And unit bank has a more operational freedom. Okay, immediately they can take the decisions. Loans and advances are based on the merit and the whether they are going to get a profit or not, if they're going to get a collect the returns, get the returns from the customer or not. Based on that, they'll give the loans. Here, instead of merit, the influence by the authority or the power, means unit banks are pressurized by local authorities and local politicians. Financial resources, larger financial resources in branch, because the branch banks have so many branches, so they have a larger financial resources, where unit bank has a unit bank has only one bank, so the resources are comparatively less. Decision making can be taken in a hierarchical order from the head office. Is immediately can take the decisions. Funds, yes. In branch banking, funds can be transferred easily from one branch to another, but in unit banking, no branch, no transfer, no support from the other branch. Cost of supervision is in branch banking is high, in unit banking less. Mismanagement possibility is there, but in unit banking can be minimized. Differences, branch banking. Again, competition, branches have a high competition. Who will do best business, best trading and business with the customers? That branches will have the competition among themselves, and in unit banking, no competition. Only one bank, one customer, one banker locating in the one area. The next, just deposits and assets are revised, scattered among the branches. No such scatterings. The next one is chain banking. Like a small group of individual controls, they are more independently chartered banks. Okay. Like private banks, whatever you see, those can be taken under the chain banking. A small group of persons owns and controls some independent banks. Each bank carries its operations independently without any internal interface. You may say, actually, if you see Lakshmi Vilas Bank, it's first started as a chain bank. Okay. Based on Lakshmi Vilas Bank, then Lakshmi Bank. These all are comes under the examples of chain banking. The next one also different from branch banking. Chain banking is different, branch banking is different. And then structure is also different. The next one is group banking, of banks designed to be used by groups rather than individuals. In group banking, the bank will offer incentives, discounts, fees, interest rates, and benefits not available to individual customers. Okay, group banking, we have more personalized banking system. The relationship for the members, the bank designates one representative, more knowledge about the group needs as a point of contact for all the group members. Means one person who has a contact with others will be representing and will undertake the activities relating to the group, and he will be provided access with the interest rates and fee discounts and other perks will be provided to the regular customers. Okay, means who will maintain the regular account with the banks. For those customers, various benefits will be provided. More personalized relationship with the members and the customers will be maintained. Okay. The next one, mixed banking system. Deposit banking and invest banking. Now we are watching these commercial banks or become mixed banking system. Like what is that? Commercial banks, how commercial banks are mixed banking, because they are accepting the deposits at the same time they are involving in the investment activities. So we can say banks which are into deposit banking and investment banking, we can call them as a mixed banks. They provide short-term loans to the customers, business entities, also long-term loans to the industries. At the same time, they also provide investment opportunities, means mutual funds, okay, other whatever you have, you are become na? Okay. Mutual funds, investments, encouraging the customers in investing their savings and in the form of mutual funds, and helping the capital mobilization for the industries. That's how mixed banks performs their functions. Then after that, we have central bank, which is a largest bank and a high topmost bank in the banking sector for any country. It controls the money and regulates the money and credit system in the country. Among the entire banking structure, central bank occupies the top position. Okay, and it's a reserve bank. We can call it as a reserve bank or central bank of that country. So about this central bank, we will learn in the forthcoming chapter. The next one is we have industrial banks. Industrial banks are those banks which provide long-term loans to the industries to meet their capital requirements. These industrial banks will provide not only the industrial banks provide not only what we call loans, they also act as the underwriters. Underwriters means what? In case companies are not able to raise their minimum subscription after issue of shares to the public, then being as underwriter, these industrial banks provide means subscribe the shares of that companies. Like that, they act as the underwriters of companies in raising their capitals. So that these industrial banks plays an important role in mobilizing the funds. Next, we have exchange banks. Exchange banks are those banks which are exchange banks are those banks which are involved in foreign exchange, means foreign exchange transactions, like generally imports and exports takes place, right? In these import and export transactions, the banks will stand support to the for the importers and the exporters in exchanging the currencies in the foreign trades. Okay, they issue the bank what you call letter of credit. Uh, they also helps their customers, foreign trade customers, in issue of letter of credit, and guarantor acts as a guarantor. All these activities undertaken by these exchange banks. Okay. The next one is we have after this we have so many other types of banks: land mortgage development banks, cooperative banks, consumer banks. Like that, we have different types of banks operating in the entire economy in order to meet the financial requirements of different categories of the people. Like for agriculture, the people involved in the agriculture, people in the business, profession, individuals, and many others, in order to meet and consumer. How consumer nowadays you are saying, even to buy your to get a marriage, if you don't have the funds, banks are there to provide you loan for marriage. Okay, and banks are providing loans to purchase, make your new purchases for in apparels, whatever you want, personal loan, like that. So different, in order to meet different financial requirements of our different categories of people, there we can find different types of banks operating in the economy. So these banks may define differently. This, whatever it is, the major primary function of these banks is accepting the deposits of money from the public and then lending the same to the public for as a loans, or investing those deposits in the companies, so that mobilizing the capital that are required by the industries. That's how they are involved in the demand and supply of money as well. Okay, so that's about different types of banks. Now let us see our next topic, that is commercial banks. Okay, commercial banks. Let us see about commercial banks. Yes, what are the commercial banks? Commercial banks generally, before we commercial bank means these are the banks which are primarily involved in acceptance of deposits and lending loans to the public. They accept deposit on which they pay interest and they lend loans on which they charge interest at a higher rate than the interest that they pay on the deposits. So commercial banks mainly create credit. Their objective or the aim is creation of credit. Before we get into the understanding of commercial banks, we should learn about this. Money multiplier. Money multiplier. What is money multiplier means? Money multiplier means that is every how initial deposit of a commercial bank is led to the huge financial amount and involved in a total money supply. That is I'll explain you that money multiplier here. I used to have, see here, just take an example. First stage, first a new bank. This is the first bank to be opened in the market, and the first deposit collected from the public is 100. Okay, as per the government rules, they are supposed to keep some reserve. Okay, this related PPT. Okay. Anyway, look at here. So deposit is 100 rupees. As per the RBI rule, the commercial bank has to meet the reserve cash reserve of 10 rupees. Say. Okay, that's just to make you understand. I'm telling you, children. Okay, the 10 rupees reserve they maintain. The balance 90 rupees, what they do? They give loan. Okay, this 90 rupees loan, whatever they given, how do they give? By transferring to the borrower account. By transferring to the borrower. How do you get the loan amount? Is your loan amount paid by given to you cash by your banker? No, no. What the banker do? Will transfer that loan amount to the your account first. Then from your account it goes to your lender, right? Means for the construction, building construction, then contractor it goes from your account. If you are buying a car from your account, it goes to the car company, right? So like that, this 90 rupees, what this first bank has done, given loan to some X person and transferred that loan amount to the X person's account. So the second bank now has a 90 rupees. This is the second bank in the second stage. The second bank has a 90 rupees in its account, and now this second bank, out of this 90 rupees, has to keep 10% aside. That is 9 rupees. The balance 81 rupees it can give to the loan, give as a loan. This 190 is a total deposit now. 100 plus 90. Okay. So 81 rupees now bank, second bank can give loan to its one of its customers. But how it give loan? That again, it transfer that loan amount to the customer beneficiary. Transfer that amount to the beneficiary. So third bank it moved. The third bank again deposited 81 rupees. This 81 rupees, 10% of reserve becomes 8.1. Balance again, this third bank will transfer to the beneficiary for his purpose. Okay, the beneficiary's account is credited with 72 rupees 0.9 paisa. Now this beneficiary account, from this deposited money, keep aside 10% and the balance will pay to the pay another beneficiary. Like that, if let us take only 5 transactions. Now the that account shows, fifth banker account shows 65 rupees, 6 rupees deposit, 6 paisa deposit, out of which 10% kept as a reserve aside, and the balance has paid to the beneficiary's account, credited to the beneficiary's account. That how, by the end of this transaction, the total deposited showing in the banks, all the banks account is 400 rupees 9.5. But actually, how much amount of cash is originally deposited? 100 rupees only. But by rotation, by transferring from one account to other, money has been multiplied 4 times. Right? Multiplied 4 times. This is what called money multiplier. I hope you all understood. So the money multiplier refers to how an initial deposit can lead to a bigger final increase in the total money supply. Okay. So here, as per our example, multiplier is 4. We stopped here with the fifth stage. So money multiplier is 4. That means money has been multiplied 4 times. Okay. So multiplier, there is an initial increase in the bank deposit. Key elements: bank holds fraction of these deposits as reserves as per the instructions of the RBI, and the balance will be lent out to the to the needy people to meet their financial requirements, people or companies. This amount again will be redeposited in the another bank or other customer account. Again will be rotated. Okay. So every deposit, out of every deposit, 10% keeps aside. The balance will be lent. So that's how whatever is deposited, that will be added and shown in the total deposited money. So how do you get the money multiplier amount? Change in total money supply divided by change in monetary base, you will get a money multiplier. The next, yes, reserve ratios, 10% generally cash reserve ratio. You need to learn what is the present cash reserve ratio. So just we assume it may be between 10 to 20, and accordingly we calculated this. Now coming to the functions of commercial bank. Yes, commercial banks, as I explained, being a large financial institution, accepting deposits and lending loans to meet the different categories of people's financial requirements involved by charging interest. Commercial banks involve these functions. So if you functions, the primary functions are accepting deposits and giving loans. The remaining all are secondary functions. So let us see accepting deposits. Yes, commercial banks accept what type of deposits? What type of deposits it accepts? It accepts current deposit, fixed deposits, saving deposits. Fixed deposits means a fixed amount is deposited for a fixed period of time, which is not allowed to withdraw before the date, expiry of that deposit period. Upon these deposits, commercial banks pay high rate of interest. Okay, and this fixed deposit holder is not called as a customer of the bank. The next one is current account deposits. Current account deposits. Generally, these current account deposits are operated by business people for the convenience of operating business transactions. These current account deposits are opened for business people. Okay, and upon these deposits, bank will not pay any bank will not pay any interest, but it charge some money for maintenance of these accounts. For maintaining these accounts, it charges some money. Okay. So what is that amount it charges? Let us see. No, we don't need, but it charges some amount as a service charge from the current account holders. The next one is savings deposits. In order to encourage savings habit of the customers, banks collect, accepts the deposits from the customers. So these are savings deposits. Okay, means upon these deposits, company pay interest, but the rate of interest it pay is less comparatively with the rate of interest it pay on the fixed deposits. Okay, the next one is next function is giving loans. Second major primary function of the commercial banks is lending loans and advances. Yes, commercial banks do provide loans and advances to its customers, different types of loans to meet different financial requirements of the customers, like long-term loans, short-term loans, medium-term loans, like the different deposits, loans and advances. Advances means in accountancy, you learned about bills of exchange. Right? In bills of exchange, what is the bills of exchange? It's just a document saying that our money will be paid after 3 months. And this document before the 3 months can be deposited, discounted with the bank, and advance can be taken, right? So like that. Advances. banks give loans and advances on the basis of the deposit to the customers. And what extent the loans and advances are given by the banks depends on the amount of deposits they have and the percentage of reserves they are supposed to keep aside, and the remaining balance they will use for the giving deposit loans. So here, this is what acceptance of deposits and providing loans out of the deposits itself we call as a credit creation by commercial banks. After these primary functions, commercial banks perform many other secondary functions like overdraft, like for the business customers, it provide overdraft facility. It's simple to understand credit cards. Many of you may be having a credit card system, right? What is credit card? Even if you don't have money, you can draw the money. You can make money in the sense you can make the purchases and make payments. And within the 3 months or whatever the period set by the bank, you are supposed to pay back, right? Same facility used to be there for the bank. Same facility was offered first by the banks to the business customers, like the customers who operate the current accounts. Okay, for current account holders, it provides a overdraft facility where they can draw the money even if their account is zero, but upon which it charges some interest which is higher. Next, discounting of bills of exchange. Just now I mentioned about that. Business customers who undertake the negotiable instruments like bills of exchange and all. These bills of exchange can be discounted with the bank. It gives advance upon those bill of exchange to the customers. Investment of funds is this again under the mixed banking system. I explained you banks will not only credit creators, they're also involving in the investment of excess funds in the investment of excess funds by the banks in other companies, and helping mobilization of funds, creating income to the customers, at the same time mobilization of funds, raising capital, helping the industries. Both the win-win policy, mutual benefit it is providing by undertaking investment activities. Next one is agency functions, the third category. Agency functions like agent, it collects the checks, drafts on behalf of its customers, make payment on behalf of its customers. It like insurance premium. See, if you have insurance, what you do? You keep your account. You attach to your insurance policy account. So your policy payments time to time will be paid by the bank from your account. Similarly, collection of electricity bills, payment of electricity bills, phone bills, all these if you attach with your bank account, time to time your banker will do all these payments and make convenient of services. Similarly, it also involves in purchase of selling of securities and shares on behalf of its customers on the instructions of the customers. Not only that, bank credit like recommendations, what you call letter of credits for the foreign and the foreign trade customers it provides. Like that, so many locker facilities it provides, education loans it provides, custodian. If any, in case of any legal disputes, bankers acts as a custodian. Like that, various services commercial banks provides to its customers. That's about today's class. This is over. Here today. Yes. Is this visible, right? So we discussed about unit 4 and unit 5. Okay. And we are going to discuss about the banking reforms. Achha, reforms also today. Okay. I'll cover these banking reforms in tomorrow's class along with the central bank. Okay. Functions of central bank. If possible, we'll cover the entire third block in tomorrow's class, if possible. Okay, make sure. I just missed this, otherwise I would have been covered today's class. It's a very small topic, banking reforms. Anyway, in tomorrow's class, we are going to cover our central banking system, block 3. Yeah, now you can ask your questions if you have notes. Yes. 1 second, I'll share the notes. Sorry. Yes. Uh, so you people want the notes, right? I'll share. What is this less time? Why others left? To share, first of all, I need to close my anyone has doubts? I'll unmute you all. You can unmute yourself and you can talk. Link. Yes. In chat box, I'm sharing this class. Just let me know what is banking system. What is banking system? Banks different. How do banks function? See, a trading organization deals with the products and products or the services. Banks deals with the financial aspect of services, right? So and this banking system involves uh, majorly with the acceptance of deposits and lending loans. Under that you have different types of banks. See, I shared notes. Please let me know whether it is opening or not. You got it? It's not opening. Not opening. Okay, 1 second. I think now it opens. Please check and confirm. Okay. Commercial banks are uploaded to- is opening. Now I'm sharing one more also. 2 days. Is that okay? Right. Shall we wind up? It's not opening up. Second one. Yeah, this one you will open. It's open. Yesterday's topic and first day. These 2 days I'll share you. Let me make it properly. Right? Okay, children. We'll meet tomorrow with the Reserve Bank of India. That is central bank. Right? That is only our syllabus, right? Tomorrow's class. Before that, a little bit of banking reforms. So today's class we discuss about what? What we discussed about? Types of banks. Branch bank, unit bank, branch bank, unit bank, and the group bank, chain banking, development bank, exchange bank, mixed bank. These different types of banks along with the commercial bank and reserve bank we learned. And we also learned about the commercial bank and its functions, under which we also come across of a money multiplier. Okay, so this credit creation, money multiplier, credit creation concept of the commercial banks. Next, in tomorrow's class, we are going to discuss about banking reforms a little bit and then central bank completer. Thank you so much, children.